Bitty Bitcoin is ripping to new all-time highs, and in this video I'm going to be breaking down why I personally believe it's going to go even higher, and I'm even going to give you a couple price targets, interesting levels that you might want to be paying attention to. But before we get into the market breakdown, as always, if you enjoy these type of breakdown videos, don't forget to like, subscribe, share it with a friend. With that being said, let's rock. Now, of course, I implore you to watch this entire video, but for those of you who don't have the time, let me give you the TLDR. Bitcoin is going up because people basically no longer have trust in the US government, or at least on a relative basis to how much they did trust them about a month ago. The dollar's getting devalued and people want to keep a store of value, and they're finding that store in digital gold, aka Bitcoin. Now, for those of you who want more of a nuanced explanation of what's going on, let's very quickly take a look at the equities market. When the world's largest casino closed today, Thursday, May 22nd, here is the official headline. S&P 500 closes little change Thursday as investors worry about high yields hitting the economy. So after yesterday's horrible bond auction and then the preceding rug in the overall market, we had a bit of a recovery today. Technically, the SPY slightly green by 22 cents, 0.04%. The Nasdaq also tried to recover. Both of them sold off in the final 30 minutes of the day. Slightly more green, up about $1, about 0.2%. But guess what is holding nicely? Bitcoin clocking in a new all-time high just below 112,000. And as you might assume, some of the related equities, such as Coinbase, having a pretty solid day, gaining 5%. But just to take a step back, you can see some green today across the board on the heat map of the S&P 500. There's definitely more green than there is red, but I should remind you, this is all in relation to yesterday's kind of surprising sell-off. So with that in mind from yesterday, why there was a little bit of bullishness throughout most of the day today, we got some good numbers early on. An hour before the market opened, we got a better than expected initial jobless claims, and then at 9:45 we got some good manufacturing and service PMI numbers, and then at 10 no one was really reacting to the existing home sales. So anyway, that was all early in the session, and as you could see, we puked yesterday. Today we opened up a little bit rocky, but then after we got some of those reports, we generically started to trend to the upside, well, until once again the final half hour of power hour today. That's pretty much the skinny on the equity side of things. So let me take a moment to connect this together with the larger economy of what's going on in the Treasury markets, what's going on in the crypto markets, and how that is directly related to what we're seeing in the equities market and some of the major news. So taking a large step back, we all know, anyone who's paid attention at whatsoever, the current deficit path of the US government debt is unsustainable. It is outpacing GDP, which you never want to see, but overall, the rate at which we are growing our deficit is not good. Also, the forward-looking inflation expectations also not good. And then recently, we found out from the Fed that there's pretty much no chance we're getting a Fed rate cut in June or July, and we might be getting a 25 bips rate cut in September. So putting that all together, not so good for the equities market. And then when you consider what played out yesterday, where clearly the market did not have an appetite to buy US government bonds, as in there was a little hesitation of, are they really going to pay them back or not? Now, I want to be clear, the fact that the US government is in control of its own dollar with the Fed, yeah, they are not going to ever default on debt because they can literally just go print more money. But remember what happens if they do that, if they can't make good on their debt and they're forced to go and print more money means more inflation, which really does dramatically make the entire situation worse. But that is in fact the situation we're in. So that all together is not so bueno. And now we have some recent political news that is basically putting some gas on the fire. Check this out. Trump's next hurdle, the bond market hates his beautiful tax bill. The big, beautiful bill. Well, recently it just passed and it's going on to another chamber. President Donald Trump has passed a tax bill in the House, but faces a new challenge in the Senate where he must appease customers of the ballooning U.S. debt. As you can tell, that is the center of this entire debacle. What the House Republican budget bill means for you and your money. Now, obviously this is important from a holistic view, but I really want to focus on what it means for us and our money in our trading accounts. House Republicans today, Thursday, advanced a multi-trillion-dollar tax and spending package that could have sweeping impacts on household finances. The One Big Beautiful Bill Act extends the 2017 Trump tax cuts. Remember, We're already having a deficit issue, and this is extending tax cuts. They slash spending on social safety net programs like Medicaid and SNAP and overhauls federal student loans. The House bill adds or expands tax breaks on auto loans, tip income, and health savings accounts, temporarily raises the child tax credit, and ends EV tax credit. So I understand that we're talking about politics, and I also understand in the modern era talking about politics is a pretty touchy subject. So hearing this, you might be thinking,
no, that is great for the deficit and it'll fix it. We should pass this.
Other people are going to say,
no, it's bad for the deficit and it's not going to fix it.
All I can tell you is, hey, you're entitled to your opinion, but what the market is saying, generically, the voting mechanism of the market, the fact that the overall equities market is going down, yields are going up, bonds are going down, and the dollar is diving, is telling us that, in fact, they do not think this is good for the deficit. So like I said, you're entitled to your opinion, but the market is sending a pretty clear message. Treasury yields back off after the 30-year yield touches the highest since 2023. So this is a look at the 10-year. Obviously, that's popping recently above 4.6%. You could look at the 20-year yield, which really ripped yesterday, got above 5%, and we're still on top of it, but it is a bit of a breather. And then finally, what was just referenced, looking at the 30-year yield. Yes, this is the highest from 2023. We ripped, but taking a bit of a breather. Please remember that yields and the underlying bond price, they move inversely. As yields go up, bonds go down. As bonds go up, yields come down. So on this spike of yields, which is generically associated with not such a bueno situation in the stock market, the equities market, that means bonds are tumbling. And in this particular cluster of a situation, it's also now being associated with the dollar dropping. This is DXY, the old Dixie, the US dollar index. It is a comparison of the US dollar versus a basket of other currencies such as the euro, the yen, the pound, and those are the three major ones, but there are other ones in this basket. As you can see, the dollar is being devalued against other currencies in the world. And that means if you are storing your wealth in US dollars, say in your savings account, your checkings account, or your trading account, whatever it is, on a relative basis to other currencies, you are losing purchasing power, which really brings me to the crux of this video, which is exactly why we are seeing Bitcoin not only hit a new all-time high, but it's why I believe it can even keep going, because people don't want to see their purchasing power get really messed up on a relative basis. And then when you add in inflation, it gets even worse. So people are looking to store their value from their hard-earned work into something else. And guess where they're apparently, since the start of April, choosing to store it? Well, the answer is bitty Bitcoin. The previous all-time high was 109,000. We dipped all the way to 75. And then in early April, that's when we saw the major decoupling from Bitcoin to the Nasdaq started to behave as its own. And Bitcoin's been ripping ever since. Beautiful higher highs, higher lows. That's a bullish trend. It's on top of the EMA cloud. And if you look at the inflows into major ETFs such as IBIT, man, oh man, billions of dollars going in and not much money going out, which is exactly how we hit this new all-time high of 112,000 per coin. As of right now, all of crypto, the entire sphere, is worth about 3.5 trillion, and Bitcoin itself, the biggest one of them all, is worth about 2.2 trillion. And you can see that we are seeing some nice gains. At this moment in time, the S&P 500 is roughly break even on the year, while Bitcoin is up about 58% on the year. So the trade thesis is this: if you think the US government is going to continue on this unhealthy, unsustainable path, that's not good for the market, but it is particularly good for Bitcoin. As we see yield spike, bonds drop, equities drop, and the dollar get devalued, people are going to be forced to store their wealth somewhere else. Historically, that was real gold, which is also why that recently hit an all-time high. But now in the modern era of trading and investing, we are seeing people as of early April say, you know what? I like this Bitcoin thing. That's where we can store value. And we know that there's limited supply and the demand is rising and rising and rising. So that means the equilibrium point between supply and demand is price is going to keep rising and rising and rising. And now I should probably apologize. I should probably say I'm sorry, because I know at the start of this video, I said I was going to give you price predictions, and that was just a little bit of a content creator hook, because I think price predictions in this particular circumstance are silly. I am not an active Bitcoin trader. I am in this for the long haul. I am a long-term investor. Yes, in the short term, the next day, week, month, year, I want it to go up, but in reality, it doesn't matter to me, because I'm going to be in this thing for the next couple decades. I'm talking 20, 30 30, 40 years. I have a long-term vision on this. I am not getting out in the next couple days, weeks, or months, or even the next year. It doesn't matter to me. Of course, I'm an emotional investor. I'm there with all of you. I like to see it go up and up. I like to see those unrealized gains. But in reality, here is my plan. I am a long-term investor. When there's dips, I dollar cost average. And other than that, I kick my feet up and I enjoy the ride. Now, obviously, if you're a trader, that's when you want to start looking at the options market. That's when you want to look at the technicals, the highs and the lows, and Fibonacci retracements and extensions and everything else in between. Or you could keep it simple and just be an investor and understand where the entire global economy is going and realize that there's a better chance than not, at least in my humble opinion, that Bitcoin will end up reigning supreme. Of course, I just want to reiterate, these are my own opinions. I do not have a clairvoyant ability to know where things are going to be in 1 or 2 or 3 decades. But right now, reading the tea leaves, I'm feeling really good about long-term dollar cost averaging into this digital store of value. So with all that being said, I hope you have a better understanding of right now why Bitcoin is leading the charge higher, why other things are looking a little bit questionable. Of course, if you have any questions, let me know in a comment below. I would also love to hear from you and your thoughts and your opinions. But with that being said, that's what I have for you in this video. I'll catch you in the next one. I appreciate the good vibes.